Welcome back to the deep dive, everybody. Today we're going to be digging into this article from the Motley Fool, and it's called "Two Stock Split Artificial Intelligence AI Stocks to Buy Before They Zoom Higher," according to Wall Street analysts.
Oh, catchy title.
Yeah, so it's by Adam Levy, and it was published March 15th, 2025.
Okay.
And we're going to be looking at Lam Research and Palo Alto Networks.
Right.
Now, these companies have, already gone through a stock split, which is interesting because that usually signals that they've, seen some pretty significant growth.
Right.
But this article is saying that, according to Wall Street, there's still a lot of room to grow.
Interesting. So even after a split, they're bullish.
Yeah,
That's a good sign. Usually split makes you wonder, has it run its course?
Right. Yeah. Have they peaked?
Exactly. So we're going to be diving into this article to understand, what's driving this continued optimism in the AI landscape for these companies.
Awesome.
So first up, we have Lam Research. Okay.
They trade under the ticker LRCX.
All right.
Now, the article highlights that they are a global leader in manufacturing something called wafer fabrication equipment.
Right. And that's a mouthful.
Yeah.
Not everyone's familiar with what that even means.
Right. So could you break that down for us?
Sure. Imagine you want to bake a cake, right?
Okay.
You need an oven.
Yeah.
Lam Research makes the ovens for the semiconductor industry.
Okay.
They produce this highly specialized equipment that's used to manufacture those super advanced chips, and we're talking the processors, the AI chips and the memory chips, and they're both essential.
So they're like the backbone of the whole AI boom.
Exactly. As AI demand explodes, you need more of these chips, and you need the tools to make them.
Makes sense.
So that's where Lam Research comes in. It's that foundational layer you were talking about earlier.
Now, the article specifically mentions that their equipment is really important for memory chips. And these are key for training AI models and for what they call on-device AI inference.
Right, and that sounds very technical, but it's actually pretty straightforward. Think about training a large language model. It's like feeding massive amounts of data to it.
Mm-hmm.
So high-performance memory, it allows that data to be accessed and processed super quickly, which means faster training.
Got it.
Now, on-device inference, that's about, bringing AI directly to your phone or laptop without needing a cloud connection.
Right.
So you need powerful memory within the device itself to run those AI algorithms smoothly.
So no matter where you are, you need that advanced memory.
Exactly. From the giant data centers to your pocket, Lam Research's tools, they make that possible.
And it's interesting because the article says Lam Research expects to actually increase its share of this market, the wafer fabrication equipment market.
Yeah, that's a bold statement.
Right. Especially in such a competitive industry. What's behind that confidence?
I think it's a couple things. I mean, they're already a market leader.
Yeah.
And they're investing heavily in research and development, They're not just sitting back.
Right. They're pushing the boundaries.
They are, and they have this ambitious goal to capture over 50% of the incremental growth in their serviceable addressable market.
Now, break that down for me. What does that term even mean?
Sure. It's basically the slice of the entire chip-making equipment market that they realistically think they can sell to.
Okay.
No company can sell to everyone.
Right.
So 50% of the new growth, that's significant. That signals a real acceleration in their revenue.
Yeah, I was just going to say, they projected some pretty impressive revenue growth, right?
They did. At their recent Investor Day, they projected between 11.5% and 13.6% revenue growth over the next 4 years.
Wow. That's pretty healthy for a company that's already, as large as they are.
Absolutely. Especially in a mature industry like semiconductors.
Right. And it's not just about selling more. They're expecting to increase their profitability too, aren't they?
Yes, that's right. They're expecting their operating margins to expand into the mid 30% range.
Okay.
Up from 30.6% in 2024.
So how do they pull that off?
Well, it's often about scale. As they produce more, their operations become more efficient.
Okay.
They can squeeze more profit out of each sale.
So more demand, more production equals greater efficiency, higher profits.
Precisely.
It's a virtuous cycle.
It is.
The article also mentioned their competitive advantage.
Yeah.
They're suggesting that being a dominant supplier allows them to pour more money into research and development. How critical is that in an industry that's moving as fast as semiconductor technology?
It's crucial. You can't stand still in this business.
Right.
If you're not innovating, you're falling behind.
Yeah.
So Lam Research, by investing heavily in R&D, they can develop those next-gen technologies that chip manufacturers need. So, it helps them keep their existing customers happy.
Right.
When they need to upgrade their facilities. But it also wins them new business.
Okay.
As more players enter the AI chip space.
So they stay ahead of the curve.
They do. It's a self-reinforcing cycle of innovation and market share.
That's a good position to be in.
Absolutely.
So the business seems pretty solid, from what we're reading here.
Yeah.
Let's talk about the stock itself now. The article mentioned it was trading at less than 20 times forward earnings.
Okay.
At the time of writing.
Uh-huh.
Now, for a company with this kind of growth, that seems like it could be undervalued.
Yeah, it's certainly possible. A PE ratio below 20, that's something to take note of, especially with such strong growth prospects.
Right.
It could be that, investors haven't fully grasped the future earnings potential here,
Right.
driven by this huge AI demand.
Right. Of course, market conditions and the broader economy, those play a role too.
Always.
But, just looking at the fundamentals, it does seem appealing.
It does.
And it's not just about the potential for the stock price to rise,
Right.
Lam Research also has a pretty shareholder-friendly approach when it comes to their cash flow.
They do. They've committed to returning 85% of their growing free cash flow to shareholders.
Wow.
Through dividends and stock buybacks.
And remind us, why is that important for investors?
Well, dividends, those provide a direct return to investors.
Yeah.
You get cash in your pocket.
Yeah.
Buybacks can reduce the number of outstanding shares,
Okay.
which boosts earnings per share and makes the stock look more attractive.
It's a way to reward investors as the company grows.
Exactly. They're sharing the wealth, so to speak.
Okay. Last thing on Lam Research. The article noted it was trading around $75 a share with a median analyst price target of $100. Now, that's a potential upside of 33%. That's pretty substantial.
It is, yeah. That's a pretty significant gap. It shows there's a strong consensus among analysts that the stock has room to run.
Right.
As the market recognizes its growth potential.
Yeah. Okay. Let's shift gears now and talk about the second company highlighted in the article, Palo Alto Networks.
Right.
They trade under the ticker PANW.
Got it.
Now, they're in a completely different segment of the tech world. Cybersecurity.
Right. Very different from chip manufacturing.
Yeah. So how is the rise of AI and its increasing adoption impacting the need for cybersecurity?
Well, AI is, it's making the digital landscape more complex and interconnected, which unfortunately means more opportunities for cyber threats.
Right.
We've got, the expansion of remote work, the reliance on the cloud, and AI systems themselves all need to be protected.
Yeah, everything's connected these days.
It is, and there's more data than ever, often in more vulnerable environments.
So the stakes are higher.
Much higher. And that's where companies like Palo Alto Networks come in with their robust security solutions.
Right, so they're kind of like the guardians of the AI age.
In a sense, yeah. They're on the front lines of protecting this rapidly evolving digital world.
And the article mentions that Palo Alto Networks is making a strategic shift towards something they call platformization.
Right, and that's an important development.
Yeah, what does that actually mean, though, for their customers and for their business?
Sure. Think of it as moving from having a bunch of individual security tools, right, to having one unified platform.
Okay.
So they're bringing all their products and services together into a single system that shares data and intelligence.
Okay, so it's about integration.
Exactly. Instead of having separate tools that might not communicate well, the goal is to create this more comprehensive and efficient security posture for their clients.
So it's like, a one-stop shop for security.
Yeah, and the clients seem to love it.
Yeah, the article says they got 1,150 platformizations by the end of their most recent quarter.
Right, a 35% jump year over year.
Wow.
That's impressive.
It is. So what are the benefits of this platform approach?
Well, for customers, it means a more streamlined experience.
Yeah.
Easier to manage.
Okay.
For Palo Alto, it means greater customer loyalty.
Right. Once you're integrated, you're less likely to switch.
Exactly.
Makes sense.
And there's a data advantage.
Yeah.
They can use the data from across the platform to enhance their machine learning algorithms.
Oh, interesting.
So they can detect threats faster and respond more effectively.
So the more customers they get on the platform,
Yeah.
the smarter their security becomes.
Precisely. More data equals smarter security.
It's like a network effect almost.
In a way, yeah, it is.
That's pretty cool. The article also pointed out the strong growth in their what they call next-gen solutions, with annual recurring revenue increasing 37% year over year.
Yeah, ARR, that's a key metric for subscription businesses like Palo Alto Networks.
All right.
It shows how much predictable revenue they have coming in.
Oh.
So 37%, that means there's strong demand for their newer security offerings.
Yeah.
Things like cloud security and AI-powered threat intelligence.
So they're really capitalizing on the AI trend.
They are. They're well positioned.
Yeah. And what about their future revenue?
Their remaining performance obligations, that's their RPO, also saw accelerated growth, 21% year over year.
Okay. And what does that tell us?
It's basically a backlog of signed contracts.
Oh, okay.
So it gives you a sense of their future revenue.
Right. So the pipeline is full.
It is.
That's good. So how does the market value Palo Alto Networks right now? The article mentioned it was trading at an enterprise value of about 13 times analysts' expectations for revenue in the current fiscal year.
Yeah, that's a fairly high multiple, but it's not unheard of for a company in cybersecurity with this kind of growth.
Right, right.
I mean, they're a leader in the space. They've got this platform strategy that's driving recurring revenue. The key thing is that Wall Street expects them to keep growing at a good clip, something like 15% annually for the foreseeable future.
Wow. Yeah, the article mentioned that.
And as their platform matures, their profit margins should expand.
Okay, so investors are paying a premium now because of that future potential.
Yeah, they're betting on the future.
Okay. And the article says, similar to Lam Research, Wall Street analysts are also pretty bullish on Palo Alto Networks.
Yeah, they are. The article notes that it was trading around $180 per share with a median analyst price target of $225.
Okay, so that's a potential upside of, what, 25%?
Yeah, around that.
So again, another, pretty significant potential return.
Yeah, and it shows that analysts think the current valuation doesn't fully account for Palo Alto Networks' growth trajectory and their market position.
Right. Okay, so we've looked at, the fundamentals and the sentiment from Wall Street for both of these companies. Now, the article, as we've said, it specifically calls them out as stock split companies. We know a stock split itself doesn't change the value of the business.
Right.
So why is that even mentioned? What's the significance here?
Well, it's more of a signal. It's a sign that the company's stock price has been doing well.
Okay.
It's gone up enough to warrant a split.
Yeah.
So in a way, it's like a vote of confidence from management.
Right.
They think the stock is going to keep rising.
So they're trying to make it more accessible to more investors.
Yeah, that's usually the reasoning.
Okay.
To attract a broader range of investors.
So these stock splits, they're not just, random events. They're based on, the company's performance.
Right. It's the combination of that past performance, and then you layer on top of that the optimism from the analysts, They still see significant upside even after the split.
Yeah.
That's what makes this interesting.
Yeah. And the article makes sure to point out that even after these splits, the current trading prices are still, quite a bit below those price targets set by the analysts.
Exactly.
That's something for our listeners to keep in mind.
Definitely. I mean, it reinforces the whole idea of the article.
Yeah.
That these companies are still attractive buys.
Right. Okay. So to sum it all up, we've done a deep dive into Lam Research, which is, crucial for manufacturing those AI-enabling chips, and Palo Alto Networks, a leader in cybersecurity, which is becoming even more important in this AI world.
Absolutely.
Both companies have a history of strong growth, hence the stock splits.
Right.
And both are currently trading at levels that Wall Street analysts believe offer a good margin of safety and potential for return.
Yeah, I mean, when you look at those potential upsides, around 33% for Lam Research, 25% for Palo Alto Networks, those are compelling numbers.
They are. So as our listeners consider, the impact of AI, its transformative power, I think it's important to think about the foundational pieces that are needed to support this revolution,
Yeah.
You need those advanced chips.
Yeah.
And you absolutely need the security to protect it all.
All goes hand in hand.
It does. And Lam Research and Palo Alto Networks are key players in those areas.
They are.
So, as you're thinking about AI and its impact on the world, it's worth exploring what other, foundational layers are being built.
Absolutely.
What other industries or businesses, might offer similar opportunities as this wave of technology continues to reshape our world.
It's an exciting time to be an investor.
It is. Well, that's all the time we have for today's deep dive. Thanks for joining us.
Thanks for having me.